Howdy, folks. Welcome to the Daily Coin. My name is Rory, and today is, what is today? Today is Friday, April the 3rd, 2020. And I have the very distinct honor and great pleasure of welcoming back a gentleman who I've been following his work for years. The last time that we spoke was June of 2016. It's been a minute since we've talked. And he's one of the greatest voices that we have out there regarding what's going on with the oil and energy sector. And he is one of the great analysts that we have looking at the mining sector as well. And he published a piece yesterday that caught my attention. Reached out to him, asked him if we could do an interview next week. And after reading the piece, it was like, we need to get on the horn right away. So I reached back out and said, Steve, can we do it tomorrow on Friday? And he said, absolutely. So here we are. And I'm, like I said, very honored to have back after far too long a stretch, Mr. Steve St. Angelo, who is the publisher of the SRS Rocco Report. He has the SRS Rocco Report video channel. Steve, welcome back to the Daily Coin.
Rory, it's great to be back. Yeah, it's been, it's been almost 4 years, right? There was a lull there in the precious metals when the price fell, and it seemed like the precious metals weren't the place to be because, all the tech stocks and the stock market just kept going up and up towards the moon. So now the situation has changed, and it's changed faster than I ever thought it would. So we've got a lot to talk about.
Yes, we do. And things have really changed quite dramatically. I've made this comment before, just recently, that I've never experienced a news cycle the way that it's been the last 6 weeks, 8 weeks. It feels like we've been just in this perpetual hamster wheel for several weeks now, and it's like, just let me off. I just want to get off for a minute. But it's not why we're here. Why we're here is because the refineries, the gold refineries, the top 3 gold refineries in the world shut down. Randgold running at less than 50% capacity. Mining operations around the world are either running at way less than capacity or have shuttered their operations as well. You published a piece yesterday. It's right there on the screen. Global silver supply collapse on its way. Mexico mining suspension to hit silver supply. And in this article, you detail what's going on and pointing out that Mexico is the world's largest silver producer at some 23% of the world production and produced more than 200 million ounces in 2019, which was up from 196 million in 2018. You go on to say that Peru has shut down as well. They were supposed to reopen, but they haven't. And between those two nations, that's 40% of the global silver mine production. Where do we go from here, Steve? How are we going to be able to get any eagles or rounds or anything?
Well, that's a loaded question. One's about one's about that silver that goes all the way back to the mine, and then there's the getting the silver eagles, which is all the way at the other end of the spectrum. But
exactly,
if we look at what's happening, Peru announced back in March 15th a suspension of non-essential activity, and that including the mining industry. So a lot of mines shut down, but it's been 15 days. They said it would be a 15-day quarantine. I have not seen any update on that yet. Pan American Silver shut down 2 of their silver mines in Peru and 2 of their gold mines in Peru. And I have not seen an update that they've restarted production of any of those mines or any mines in Peru or which ones have been shut down. Now, Mexico just announced, I believe it was yesterday or the day before, the same thing. It's a shutdown of non-essential activities. And the mining industry was looking for an exemption. They did not get one. However, I got an email from Cameron at Gold Silver this morning that actually some projects in Mexico are allowed to continue, but I don't know what those are. But here's a list of the mines that are shut down. Newmont is shut down, Peñasquito in Mexico, Gold Resources shut down, Sierra Metals is shut down, our Argonaut Gold, Agnico Eagle is shut down their mines, Alamos Gold, Pan American Silver, Fortuna Silver, and Endover Silver. And those are just some of them. And like you said, 40% of silver production comes from Peru and Mexico. So if they're offline for a month, that's 28 million ounces that's going to be lost. Now, I don't know how long they're going to remain on quarantine. So it will be interesting to see. And let me just tell you this. These are the mines, the countries that are shut down already. We've got Peru, Mexico, South Africa, Canada, Spain. Spain has shut down a copper mine in Spain. Sweden has shut down a huge zinc mine in Sweden. And then in northern Italy, where they're having a lot of the issues, they've shut down another mine. And guess what? They've shut down, I think it's between 8 to 10 coal mines in the United States. In Kentucky, in Pennsylvania, in Virginia, and West Virginia. Virginia, as of a week ago, they were going to keep their mines open. They just shut those down 3 days ago. They shut down 4 of their coal mines in Virginia. So now we're starting to see this is problematic because
That's a huge problem.
Yes, it is. There's 2 kinds of coal. There's the coal that they mine out in the West, and that's a lot of that is used to generate power. But some of this higher quality black coal that is mined in the Appalachian, some of it's used for power generation, but a lot of it's used for iron, steel. They need a certain so. It's very interesting that we're starting to see in just the last 2 weeks shutdowns of these coal mines in the U.S. So it's interesting. I do think in the next, as the supply chain is very long, it takes time for a product to get to refiners, and then from refiners to the industry or to the mints. I believe we're going to start seeing a supply disruption here. And if these quarantines go on longer, it'll just be more of a longer supply chain disruption.
Now, the miners, the silver miners, the ones that you just listed, they really aren't known for hedging a lot of their product. I mean, so they aren't sitting on millions and millions of ounces waiting to go into the market, or are they?
No, it depends. Some companies, well, here's the issue. What you have is you extract the ore, you put it through a ball mill, and then you process it. And then,
Right.
so they always have a stockpile of ore, but it's not a huge stockpile. So there's always a stockpile of ore that they always have a backup. They don't ever want to run through all that ore. And if you watch the show on Discovery, the gold mining show, I can't think of the name of it, but that's the same thing. So there is probably some ore, but if they go through some of that ore and they continue to process this, when they start back up, they won't have any ore. So I don't believe there's a substantial amount of silver stockpiled at these mines.
Okay. Yeah, and that's where the issue is going to come in. I mean, let's say they do have some ore stockpiled. It can't be all that much. I wouldn't think that it would be, and it doesn't even matter if they've been ordered to shut down. They can't process it. So that's going to create a gap at some point in the supply chain. You combine that with the gold refineries that we know are shut down around the world, and those 4 that I talked about just a moment ago, those 4 represent somewhere around 60 or 70% of the world's gold refinery. I mean, the world's volume of gold that's being refined. I mean, so this is going to we're going to see huge impacts. Are you hearing anything, Steve, about transportation disruptions as far as the railways? And we know that the airlines they're struggling. There's very little activity going on with the airlines. are we seeing the same thing with the railway? I haven't seen anything about that.
I have not yet. I do know internationally there is some curtailment of shipping. But you see, that's a good question that you mentioned about the gold refining shutting down. See, I see two issues happening here with the global supply chain. And let's
Okay.
just talk about the global mining industry.
Okay.
One is actually shutting down the mine due to protecting against the virus spread. That's one aspect. The second aspect is this massive shutdown of the global economy. And I believe we could see GDP growth in the world fall 20, 30%. And so the thing is, trying to restart that's the next phase. It's not going to restart that well. The problem is that's the second problem. Then there's going to be mines that are going to be ramped down or shut down because there's not going to be the need for copper, zinc, lead, and then that's going to impact the silver industry or supply more than gold. So that's the next phase, is when all this supply chain destruction and lockdown of the global economy, you can't really restart it quickly. And I don't think it's ever going to come back to what it was in December 2019. And so then a lot of these mines, they're going to be shutting down or significantly curtailing production and supply. That's the next phase. I think that's even worse than this initial phase.
You think that the mines are going to be cutting back, even though there's unbelievable demand at this point? How are they going to be able to justify that?
Let's remove gold and silver from that equation.
Okay. Oh, I see. Now
I'm
I got
talking
you.
about
The base metals.
The base metals,
Gotcha.
iron, aluminum,
zinc. Yep.
So even though gold, let's say the virus goes through, but the world has been hit so hard, and we can discuss this maybe in a minute. The world has been hit so hard, the financial assets are unraveling. So it's going to be hard to restart this at anything close to what we were back in December 2019. So that means we're going to lose production from base metal mining, from iron, from aluminum, and that's not going to come back. And so that's going to impact silver supply, because 61% of silver supply is a byproduct of copper, lead, and zinc. And so it's much more bullish for silver, I think, than even gold.
Okay. Wow. Because there's so little of it? Is that the reason?
Well, right now it's about 85+% of gold is primary gold production. Only 28% of silver is primary silver production.
Wow.
So if the world economy is really going to get hit, you're not going to need a lot of copper. You're not going to you need a lot of zinc and lead. And if let's say demand for those initially drop 25, 30%, then they're not going to need to mine copper, lead, and zinc at that percentage. And then you're going to lose a percentage of silver production just from slowing down the base metal mining industry. And that's going to be a much bigger impact on global silver production than gold.
Yeah, because the construction industry, there won't be very much of a need for new homes or new buildings or new anything of scale going on for probably 6 or 8 months or even a year after everything gets restarted, once everything calms down. So it'll take a few weeks, I would think, or it'll take a little while anyway for these mines to actually come back online, and then it'll take even longer for the economy to come back online. I mean, I think we're in a world of hurt right now, and in that regard, and I think that what's to come is pretty scary at this point as far as the economics of it.
Yeah, and I would imagine you would agree that the global financial system and even the economy, in a way, because it's been built upon a Ponzi scheme, really, the
Yes.
global economy. So what allows a Ponzi scheme, a typical Ponzi scheme, to continue are new investors. You
Yeah.
always need the new suckers to come
Right.
in and give you the money. Well, what has allowed the global financial Ponzi scheme to continue is oil production growth.
Mm-hmm.
Now, if I have been saying for a year or more now, we don't need much of a decline in oil production. And I thought that would be the peak and decline of US shale. That's going to be the canary in the coal mine. We don't need like a 10, 15 million barrel a day decline in oil production to unravel this global Ponzi scheme, financial Ponzi scheme. Rory, we got 25, 30 million barrels taken offline of demand.
Wow.
I mean, even Goldman Sachs said 26 million. I believe it's going to be close to 30 million. That destroys the bond market, that destroys the credit market, that destroys the money market, that destroys the junk bond market, because they all need this growing oil production, which allows growing GDP to keep all this paper uh, alive. And now we have just destroyed oil production by 25, 30%, virtually overnight. And I don't think the market realizes the damage that's being done to pension plans. You've probably read about it. Pension plans, 401ks, and we're still seeing the beginning stages of it. It's going to get much worse.
I think it's going to get far worse. And the pension plans were already hijacked, and they were already in decline if they had anything in them at all. And now this is it. This is the end of it. This is the end of the pension road, because like you said, the bond market and the stock market are both, they're stock market's not near done as far as its fall. I hope that I'm wrong. I pray that I'm wrong, but I think that it has a lot further to fall than what we have seen thus far. I think that it's going to go down much further, and as it does, it's going to take the pension programs with it, just like the bond market. The bond market, as it unravels, is going to take the pension programs with it. So, I mean, in my last video, I actually explained to people that they should look at LLCs. This is not financial advice, and I'm not offering any financial advice, but Perpetual Assets, Will Lair and Gus Demos over at Perpetual Assets, that's what they do, is they help people to get their assets out of the way of what is happening right now and what we're talking about. And that's what, I mean, you should do. You should at least take a look at it. I mean, that's all that I can do is say, take a look at it, talk to some professionals and see what they have to say. But what's on the horizon, I don't like it. I don't like it one bit. And I don't think there's any escape at this point. I think that the precious metals are going to be about the only escape valve that we have. I mean, what do you see? What do you see as far as that?
I agree. I wish I could show you this chart. I put it out on my last video. It's the Dow Jones monthly. It's a monthly chart going back to 1980. Now, when the market crashed during the last financial crisis in 2008-9, the Dow Jones, from peak to decline, and in March of 2009, it lost 55% of its value.
Yes.
At that time, the unemployment rate, even though it's manipulated, the unemployment rate was 10%. The market right now, the Dow Jones, is down about 28%. That's it, 28%. Okay. According to some of the estimates I've seen, by the second quarter of 2020, we're going to see unemployment reach 25 to 30%. If the Dow Jones went down 55% on 10% unemployment, what's it going to do at 25 to 30% unemployment? Even 20%, let's be conservative and say 20%. It's got to go down at least 55, 60%. I think it's going to go down 75%. I see the Dow Jones falling, even though they can print money. I see the Dow Jones falling 75%. It's going to go under 10,000 points. I'm not quite sure the timing of this, but if you just look at the fundamentals, if 30%, 25-30% of the population is unemployed, how can the stock market not correct down to a level that it should? And so this is why it's important to get into the precious metals. Rory, this is why we're seeing now silver eagles being sold between $8 and $10 over spot. Even the die-hard junk silver, the 90% junk silver, I'm seeing premiums of $6, $7, $10, $12 over spot for junk silver, and that's usually $1 over spot. You just can't get the junk silver. And so yes, I think even though there's kind of there's a problem getting the metal because there's only so many coins and bars that can be made in a month.
Right.
I do think that's going to get worse. And I see the next stage of the bull market for silver is going to be when we start hearing more and more investors acquiring the 1,000 ounce bars. And so, because it's harder to get the smaller retail product. But yeah, I think the precious metals really are the only good place to protect your wealth during this time.
Yeah, as I call it constitutional silver, the old quarters and dimes and half dollars and dollars that we used to mint here in the United States. A lot of people refer to it as junk silver. I see it as constitutional silver. And when you start seeing those premiums, this is something I learned from Doc over at Silver Doctors years ago, is that when you see the premiums on that product going up, that means that there's a tightness in the market, that there's a shortage of silver. Not that it's not available, or it's just that means that there's less available. And as those premiums go up, it's long been a bellwether for me to take a look at and to watch that, and the last that I saw, it was about $6 or $7, and to hear that it's $8, $10, $12 over spot for constitutional silver, that's remarkable. I mean, and the Eagles, I did a couple of videos this week, one on gold eagles and the other one on silver eagles, just trying to look around at some of the bigger online dealers out there to see what was going on. And man, oh man, there are some major premiums going on if it's available at all. And some of them it's not available. The 2020s are just not available. And but that seems to be changing. There's something that's happened in the past couple of days because now and I know you work, and I referenced Tom Cloud and the hard assets when I made this silver video, because I used one of your articles as a reference point, and the article about the Eagles that you did, and this is the chart. It's here. You placed it in here, and it shows U.S. Silver Eagle sales surge past 5 million in March. Availability at low prices. Availability is at low prices, and that's where you were talking about Tom and his brother having Eagles. What are you hearing from him? Have you talked to him in the past 24, 48 hours as far as what's going on with the market?
Yeah, I talked to his associate Dan, and it's a very small company, but they have very low overhead, so they do a lot of good things. That's the reason why I sponsored them. But because they have low overhead, they can offer lower prices. That's why, because I saw such high prices, and that's fine.
Yes.
Everyone has business, but they were able to get some, but it's still 3-4 weeks. Now that has changed. That
right.
Again, 3-4 weeks. There's even some that are even longer that are now. I've seen some into June, but now that the U.S. Mint is shut down,
right?
The U.S. Mint, James had a Twitter conversation with James Anderson at SD Bullion, and he said that I asked him where he received that information. It was an email sent to all the authorized dealers that
Mm-hmm.
I guess a security guard tested positive. And so they decided to shut down that West Point facility, the U.S. Mint West Point facility. Now we have to remember, Canada has also shut down the Canadian Mint. You can't get any
Yes.
Canadian maples; those are gone.
Right.
So this is going to impact getting supply of silver eagles next, for a while. And I don't even know when they're going to go back and open up the U.S. Mint again. So we're just going to have to wait and see. But I think the most interesting part about this is that back in 2008, we heard that people couldn't get the silver eagles, the 1 ounce rounds. So there were people buying 1,000 ounce bars. And then they were taking those bars, you probably remember this, and they were making 1 ounce rounds and selling them. You can't even get the 1 ounce, you can't even get the 1,000 ounce bars. Atmex, which is a big dealer, I remember back in 2008, you look at their website, they had the big 1,000 ounce bars, and they had a serial number, and they had all these bars. So once that bar was sold, it was off the list. Atmex says none available.
Wow.
And when I was talking to Dan at Cloud Hard Assets, they can't get any 1,000 ounce bars for 4 to 6 weeks. So,
Okay.
Rory, we are in a different situation today than we were back in 2008. You can't even get the 1,000 ounce bars. It's the same problem now with the retail silver, the smaller products. So this is compounded. And now that you're starting to see the miners shut down, I think we're going to have a perfect storm here in the end of April and beginning of May. I think we could see some interesting moves in the metals. So yeah, this is unprecedented times.
It really is, and it's see if I can get this to pop out and see what's going on with the silver. Hopefully that's not going to. Okay, good. It didn't mess anything up. And we're recording. We started recording 20 minutes or so ago, and it's now 3:43 on the East Coast, and silver is currently at 1433, and that is a crime in itself. Just the fact that they would actually post that, and that's Kitco. It's not the actual. It's not a true ask price or bid, but it's close. I mean, it's within a few cents, and it's a joke. I mean, we've seen these the Comex make a couple of announcements within a week's time about how they're having to change things around, especially on the gold side. And it's just it's ridiculous that we're having to deal with these criminal entities that keep things completely out of balance. I mean, I think that if the Comex were to reflect realistically what's going on with the gold and silver markets, I think that what we're seeing right now, and I've seen 2,100, 2,200 gold coins out there online right now, just a few days ago, and silver, silver eagles, which are the standard. We love them, hate them, it doesn't matter. They're the standard. They're the global standard. Period. And they're going around $25 an ounce is what I saw just 2 days ago. So I mean, you couldn't hardly find them anywhere. And the three that I looked at was APMEX, JM Bullion, and SD Bullion. All three of those were within a few cents of each other. All of them were right around $25 for Eagles, except for APMEX. APMEX has got a shipment coming in on the 22nd. They're taking pre-orders, and they were $27 plus per coin. And you had to buy, and they were only selling them in rolls. That's it.
Yeah, and the thing is, as of yesterday, and when I spoke to Dan, cloud hard assets. They were selling them at 650 over spot. So at 14 and a half or whatever, you could get those for 21 or a little more than
Wow.
21. And that's the reason
Now is
why.
that now I wanted to ask you, is that going to be sent to my house or is that going to be vaulted?
No, you could do either way because
Okay.
there are some dealers that only allow you to vault. I have big problems with that
I do too.
because I don't know if they're oversubscribing that metal. I see some
Right.
very low prices. I saw one company list 1,000 ounce bar for 17 cents over spot. That's a red flag to me because
Huge.
Cloud Hard Assets is offering it for $1.75, which is pretty cheap. I think that's about the going rate now for those big giant door stops. But yes, if you want to take delivery home, that's the price they're offering for. That was yesterday. It could be a little higher today, but
Yeah.
I think the issue, and I want to discuss this quickly.
Okay.
I agree that the silver price is manipulated, but the reason why it's manipulated because most people are invested in the wrong assets. If we look at the silver market, 84% of the silver demand is industry, jewelry, and silverware. Only 16% is physical silver. So in this past week, month and a half, we have seen a destruction in demand for silver in industry and jewelry. No one's going to malls buying silver jewelry
Right.
or and no one is buying silverware. So two things happened in the last month and a half. We saw a huge collapse in demand for silver in those three sectors, while we had a huge increase in physical silver investment. And then we had a lot of these institutions, sovereign wealth funds, having to sell what they can. And that has what pushed the price down. So even though I do agree there is manipulation going on, this is kind of the method to the madness. Now, what's happening is we're absorbing all that supply destruction or demand destruction from those three sectors. It's starting to move into the physical. I think it's going to get even worse. And so it doesn't matter that we've lost that demand from those larger three sectors when you put them all together. I see this heading into a next bull market when these 1,000 ounce bars are really start becoming to demand. So yeah, I think when investors start seeing the problems we're seeing in all the financial system, more and more people are going to move into the physical or try to move into the physical, just like trying to get toilet paper, and it's just not going to be there.
It's
Only
just
at
not
much
going to.
higher prices.
Yes. Well, yeah, it'll be there, but you know, like you said, much higher prices. I mean, it's I've been considering bringing some of my silver back into the market at the levels that it's currently at, but I think I'm going to wait because I think that silver is still a long way away from where it's going to be here just in the very short term. I mean, I said back in 2017 that gold would be where it is right now. Uh, it's actually doing better than what I was saying, and silver. What I said back then was that silver was going to go into the low 30s, and then revise that last year, I think, or sometime to the mid to upper 30s. So I think that that's where we're going to with silver in the short term. It's just, it and with everything that's happening, right, and that was just based on what was going on in the mining industry, in the mining sector. I mean, it's just like there's no production. So, and now there's literally no production, and there's no refinery. There's no refining going on. So, and there's no transportation going on. And these are massive pieces of the supply chain of getting the silver from the ground into our hand. And this is to say nothing of the mints that are closed. So you've got the what is that? You got the mine, you got the transportation, you got the refinery, and you got the mint all shut down. It's four pieces that are
And
closed. They're closed right now. They're literally closed.
Yes, and I think, and you know, you mentioned this when we started that I started focusing on precious metals. I still do a lot, but I moved more into the energy because
Yes,
if you get up in the morning, if you want to make breakfast, you better have energy. If you want to take a shower, you need energy. If you're going to drive to work, well, you better have gasoline in your car. And if you get to work, I don't care if you work in a computer company or if you work at a manufacturing plant, well, there better be energy moving through that system to allow you to work. So if you shut down the energy, there's no economy. But everyone is focused on the finance and money. Nobody is focused on the energy. We take it for granted. I call
right.
this the energy tooth fairy scenario. We just think it's always going to be there. Now with this huge decline in energy demand, the shutdown, I don't see it coming back. And they're bickering. Russia and the U.S. and China, Russia, the U.S. and Saudi Arabia are bickering over this.
Hmm.
And the oil props up all the finance, all the stock, and all the real estate prices. When it really falls apart, all those values have become really problematic. I've always forecasted that. Now it's happening virtually overnight. I thought it would take 5 to 10 years. It's taking place in a matter of months. And even though this virus is going to pass, Rory, what's happening now in the next month or two, it's going to permanently damage the global economy, and we're not going to come back from it. So that's the other reason why it's very wise to be in the metals, because we're going to have increasing problems with the financial system and financial assets as well as real estate assets.
It's just every we're finding out how connected our world is, and we're finding out how dependent upon different aspects. Even if the United States brings back a significant amount of their manufacturing, which we should, especially on the medical side, especially on the critical issues that or the critical items that we're seeing now, that offshoring that was just a horrible idea, and the problems and the stresses and strains that it's causing within this country are immense. But we're also seeing how fragile the supply chain is, and how dependent upon a supply chain that we actually are. And we're seeing that we're going to find out over the course of the next few weeks just how detrimental a just-in-time delivery system world is. That's gonna be smacking us right in the face, and a huge part of that is going to be what you were saying, Steve, is the energy. If you don't have guys out in the field that are working these oil rigs, that are working these coal mines, that are driving the trains, that are driving the trucks, getting the energy to the central location where they need to be in order to power your home, in order to do the things that they need to do, we're going to be in serious trouble. And we're going to find out about that here if this thing continues to go on. Or am I wrong?
No, you're right. And I think the biggest issue is the oil, right? The oil is the lifeblood. It's of the global economy.
Yes.
And you can't run it on electricity. We can't do it on electricity. It doesn't work. You can power a manufacturing plant, but if you want to transport the components to the manufacturing plant, and then you want to transport those manufactured goods to the market, you need the oil. And the oil is the number one factor. Now, when you shut in a shale well, it doesn't come back the way it did before, unless you spend a lot of money on it, and it still might not come back. And so the issue is now with 8 million barrels a day of U.S. shale oil production, I believe U.S. consumption, we're consuming about 15 million barrels a day of gasoline, jet fuel, and diesel. It's already down 3.5 million barrels a day. And I think it's going to be down 5 million. So the thing is, you can't cut a million barrels if you're down 5 or 6 million barrels a day of demand. And that may be for another month or two. And so the thing is, even though we're stockpiling some, that's going to run out very quickly. So they're talking about shutting the Gulf of Mexico down because that would be easier. Those are very large wells there, very large projects there. But this is the issue now. When you start shutting this stuff down, Roy, not just in the US, in other places, it doesn't come back the way it did before. And there's a lot of other issues with debt and all that. And so I think that's going to be the problem. And so, I mean, I saw this very interesting thing that, I mean, the water treatment plants need a constant supply of chlorine to treat the water. You got to have trucks moving and moving that chlorine in there. So the supply chain disruptions have not yet materialized
Right.
fundamentally. And I think it's just going to get worse as we remain on lockdown.
They're about to kill the economy completely. And
I agree with you.
It's very concerning, and it's over. I'm not getting into that aspect of it, but they're killing the economy. That's what's happening, and
I know
it's very unsettling. And I hope and pray for each one of you that are listening to this that you are prepared, that you are putting things into place to be able to take care of your family and to be able to take care of yourself, because we're on our own at this point. That's the bottom line. And if you think that there's some white knight that's coming to save you, you're sadly mistaken, because they have stolen everything at this point. They've stolen everything, and need to seriously look at what you need to be able to take care of yourself and your family, because that's what it's going to come down to. And I mean, look at every aspect of it, because it's getting serious quickly. So, Steve, I could carry this conversation on the rest of the afternoon. It's been great catching up with you and looking at what's going on out there and getting a handle on some of the bigger picture items. And I certainly appreciate all your time, and I hope that we can do this again in the not too distant future.
Yeah, we should maybe just check out in the next month or so, see what's happening month and a half. And I would encourage your followers to, even though energy is boring, it's like people roll their eyes when you start talking about it. It's not glitzy like conspiracy theories or JFK or even gold and silver. Gold and silver, they're wonderful to look at and touch. Oil is just boring. But I'll tell you, what happens with the oil industry in the next few months, that's the key of everything. It's the key for everything. And what happens with oil here in the US, as well as globally, will indicate what's going to happen with the financial system and the global economy. And I think that's the key. But I've enjoyed this, and let's shoot for maybe touch and base in a month or two and see what's happening.
Sounds great, and certainly appreciate it. And you can find all of Steve's work over at srsroccoreport.com. Don't forget, he's got a YouTube channel under the same name. Come see me over at thedailycoin.org. And if you're so inclined, check out gospelnewsnetwork.org. And Steve, we will see you in the very near future. And everybody take care, and we'll talk with you soon.
Thank you.